Hey, what's up, Sats fans? Thanks for joining us for another episode of Swan Signal Live. Shout out to Mara for supporting the show and for securing the Bitcoin network. John Haar, in the group chat, you suggested that we all put on some ugly Christmas sweaters for this episode. I guess we all thought you were joking, and sorry to leave you hanging, brother, but that sweater is amazing.
Thank you. I'll try to get the whole thing in view here. We got...
Look at that.
You're looking festive, my man. Positively.
Yeah, I checked my closet. All my sweaters were beautiful. So sorry, John.
Awesome. So we've got a lot to talk about, as always. We're going to riff on some of the market stuff to kick off. We've got some price action to discuss. Where are we now? 96,878. I hope you guys out there are doing fine. I hope you're doing all right. This massive crash from 107 to 96. Those of you who are relatively new here, you should know that this is not uncommon pattern in a bull market in Bitcoin. Look at 2017. We had 1, 2, 3, 4, 5, 6, 30% plus drawdowns in that run up to 20K. This happens, as we've been discussing. I think these kind of dips are going to be lower this time around because we have more demand to buy things up. So I don't think we're going to see 30% dips on the way up, but that's just my opinion, man. John, why don't you kick us off on your thoughts about this price action and take us into markets in general, if you'd like.
Yeah, absolutely. So also, if you saw me looking very confused there for a moment, it's because I was. I had the YouTube open in another tab so that I could be in the chat there. So then Brady's voice started talking over Brady's voice, and I was like, what is going on right now?
I've done this many times in the show, man. And then I have to deliver the intro with like a 2-second delay of myself coming into my ear, and it's quite disconcerting. Anyway,
takes serious skill.
We're so back. Let's hear what you got.
We are so back. Yeah. So basically, Bitcoin crashes to levels that most of us were not even sure it would hit in 2024 in the first place. That's where we're at. I think, you have to talk about what's going on in broader markets. And there's like a few takeaways here. Bitcoin is kind of on the world stage as a macro asset now. It's affected by Powell at a press conference. He's being asked questions directly about it at an FOMC presser. As far as I know, that's the first time he's been asked about Bitcoin at an FOMC rate decision presser. He's been asked about Bitcoin in other situations for sure, but this is the first time on the day of a rate decision that I've seen him be asked about Bitcoin. But bigger picture here, the Fed basically, they cut rates, but as typically happens, the comments that they make about the economy and about the path of future rate cuts end up having a big impact on markets, especially if the comments they make are different than what people are anticipating. And I think that's what happened this week. You get the dot plot, which is like the Fed's, expected path of rate cuts. It was a certain number of rate cuts in 2025 that lessened to a fewer number of rate cuts in 2025. He made more statements about that this rate cut was actually a close call, is the words he used, which obviously implies that there was a chance that they didn't cut rates at all. And markets are still pretty sensitive to this, for better or for worse. So you look at what U.S. stocks did in the past few days, you look at what gold did, you look at what bonds did, and I think a lot of it is in reference or on the back of Powell's comments and the Fed's comments as a whole. So I'm not very alarmed at Bitcoin dropping from 108 to 97 or wherever it's at now. But yeah, takeaway for me is Bitcoin is a macro asset. It's gonna be affected by similar things that assets like U.S. stocks are, for example.
100%. The S&P dropped to like 3% after the presser from Powell. I mean, that's a huge move. The VIX, which is kind of the volatility index, I mean, if you could pull that up, but it was just like a crazy spike that I think it was only the Japan event earlier this year that was higher than it. It's the largest spike in the VIX, except for that moment where everything was crashing with Japan. So, I mean, it was a huge shock. And I mean, there was a while where Bitcoin held up really well for a while. I remember it trading at like 1035 while the S&P was down 3%. And I think the only reason it even got as low as it did is you had this kind of rates shock, which I ultimately think is immaterial. I think it's kind of nothing. It doesn't matter so much. It's just markets kind of adjusting the risk premium on equities. But then you had this kind of anxiety about the government shutdown. And this is something that kind of happened overnight. Oh, we're going to do it. We're going to shut down the government. And it's still a little ongoing. We don't know what way that's happening. But definitely markets are feeling a lot better. The S&P has recovered like half of its drop. VIX has come down. Typically, historically, on these debt ceiling government shutdown events, you always buy the dip, and they haven't really done it. We'll see. Maybe it's different this time, but I don't think it matters too much.
We do have a clip. Sorry. Go ahead, Brandon. And then we've got a clip from Tom Lee talking about the VIX and that Stephen was referring to. Go ahead, Brandon.
Okay, sorry, Stephen. If we shut down the government, does that prevent us from acquiring Canada as a 51 state, or do we have to just wait in order to achieve that?
There's a few different paths there. Depends,
okay, good.
Executive order versus Congress bill. How we, maybe we could pick it up for 20 bill. I don't know.
Yeah, I'm glad the conversations are starting. No, in seriousness, well, a little bit more serious. Jay Powell is being asked about Bitcoin. You know who else changed their tune or is softening their stance is our boy Neil Kashkari.
Oh, yeah?
Did he come to your meetup?
Did he come to your meetup? Did you buy him whiskey?
Don't spoil it. So if you guys remember in 2020 or 2021, right, he went on 60 Minutes. In my opinion, he's the Fed's whipping boy. If something bad goes wrong, they just send in Neil to take it. But he goes on 60 Minutes and they're like, hey, so you're telling me that you have infinite dollars at the Fed? And he looks real crazy in the camera. He's like, yes, we have infinite dollars. So that guy, he's been a Bitcoin hater since forever. And in November, so like a month ago, he said, I will have an open mind about Bitcoin going forward. So is that because the Trump administration he's like looking for job security? Does he realize he's fighting an immovable object? I don't know what his deal is, but he has started to soften his stance. I've been inviting him on Twitter publicly for like 2 years, and honestly, he's never responded once. So I don't know if we're getting to him, but hopefully next time he'll come around.
That's crazy. He said that. I had no idea. He's been a long time hater.
Yep. So what's going on in the Fed?
Let's take a look at this. Stephen was talking about the VIX, the volatility index.
One of our next guests thinks this is a great buying opportunity and the Fed remains supportive. Joining us for more is Tom Lee, Fundstrat Global Advisors Head of Research and a CNBC contributor.
This is another buying opportunity in our view. 2024 has proven to be a year where the market's been strong and it has eluded many opportunities for sustained weakness.
A good opportunity for investors.
The VIX, the spot VIX, exploded by 75%. There's only 4 times in history where it's risen 60% in a day. So yesterday was the 5th time in its 35-year history. Of those 4 times, the market recovered all of its losses within a week, 3 out of the 4 times. The 4th time it took a month. So I think what you had was people panicking to get out of what they thought was a momentum trade that's ending because we're so close to year end. But here's the interesting thing. The forward VIX futures curve barely moved. So it was almost as if people were seeking protection through the VIX yesterday. I'd say investors are tired of having the rug pull on small caps. Yesterday is an example. Unfortunately, when markets get nervous and they're risk off, and of course, buyers disappear.
There we go. Any follow-up analysis there, guys?
I shorted the VIX yesterday. I'm up 13% today.
Look at this. How's your trade?
It's going good, man. But that's the thing. It's you see. I mean, when you see an outsized move like that, it has to calm down. I mean, on a mathematical index, it has to. But it's also just like it gives you a sign of how overblown yesterday was, and it was all over 0.5% of the kind of the forward-looking interest rates. Like, it's not a big deal. The economy's fine. The Fed is, I mean, you could even talk about a Trump put here instead of a Fed put. Like, Trump's coming in a month, and like he's going to want the stock market to go up. So I think this is a blip on the radar and a major overreaction. Chances are I think it really rewards dip buyers across all assets. And
Buy the dip.
I think Steven's strategy of, assuming that vol kind of spiked up and it's going to go back down to normal levels, that is correct most of the time. The times where you always want to have a good image of what's going on in the broader economy, because think like a 2008 type scenario. That's one where it's like it gets a lot worse from here. COVID, it gets a lot worse from here. But those are, once in a decade. We used to call them once in a lifetime. Now we have to call them once in a decade. Crises happen a lot more frequently now, but still once in a decade is not that common. So in order for Steven's view of hey, this seems, a little out of whack here, in order for that view to be wrong, you would have to have the view that we're headed into some mega crisis. And I think Steven is correct that that's not what's on the table right now.
Yeah, there's just... Yeah, that's 100% it. You have to have something so substantial, and a 0.5% rate shift by the Fed is not that.
Exactly.
Neither is a government shutdown.
Yeah. And just remember the fundamentals here too, guys. You don't necessarily have to look at price action and the technicals. The fundamentals behind Bitcoin are just so extremely unfathomably to us, maybe, 5, 6, 7 years ago when we get into Bitcoin. Unbelievable, unimaginable. You've got a pro-Bitcoin executive branch, a pro-Bitcoin legislative branch, and you've got SBR that looks like it's going to happen with an executive order on day one. You've got rumors of other countries buying Bitcoin to try to front run that. And if all of this comes to fruition, Steven, we should check in on the betting markets again. But if all of this comes to fruition, 2025 is geared up to be absolutely incredible. It's a fundamental shift. We are in a new era for Bitcoin, and I like to look at the fundamentals, right? I think most Bitcoin investors do, and long-term vision. But this is an incredible setup for 2025. So there will definitely be influences, right, from the broader market. But I don't think Bitcoin's ever been more set up to thrive, even despite market conditions, I guess I should say.
Yeah, I think so.
Awesome. All right. What's next, fellas? We've got the FOMC stuff. We could do M2 next.
Yeah, sure.
All right. Here we go. Here's a graph of the global M2. Somebody explain this to us. Why has there been such a decrease in the M2 money supply in the past few months?
Yeah, so this has gotten circulated saying, hey, Bitcoin kind of lags and tracks M2. And so then everyone's obviously nervous, right? First of all, you have a scaling issue on just the scale on these two charts. They've been fit on top of each other, where you're looking at a 4% drop on the white line, but it's set up against a 40% drop on the there's a scaling thing there. But ultimately,
oh yeah, that's true. They don't have the full scale on the
these
x-axis or the y-axis.
Normalized to make a point.
Sure.
But what you're seeing in that sharp decrease on that white line is just that the dollar has rallied. So what they're saying is they're putting a value on the x-axis, which is trillions of M2 money supply. But in order to do that, you have to denominate it in a currency, and they're denominating it in dollars, right? And so even if the total amount of money in the world stayed constant, right, or even increased, it's not like there's been a decrease in the money supply. And the dollar rallied versus other currencies, you would see that come down. And that is what we're seeing, because we've had a very strong performance of the US dollar. And so this is more of an accounting thing rather than issuance rate, or that the growth rate of money has sharply decreased. Actually, the opposite, as far as I would see it, it has increased from a period of time, but that because the dollar has gone up so much, they're showing a decrease. So I'm not a big buyer on that theory, especially with the fundamental backdrop that we have for Bitcoin.
John, curious to hear your take. Wall Street guy up there in New York. Is there any conversation going on in the financial markets world about this M2 change and what it might mean?
Wall Street guy wearing an ugly Christmas sweater. Yeah, I think Steven's correct that a big read through here is what's happening with the dollar. And if you pull up the DXY, you could see that it's at the highest level. I'm just gonna pull it up myself here.
Sorry, wrong chart.
No, all good. It's at like 107 right now. And if you look on a 5-year basis, it got to a peak of like 112, 113 in the fall of 2022. What else was happening in the fall of 2022? That was a low point for like all asset prices, basically across the board. So Preston Pish had a good post on this in the last couple of days here, is that it's really not sustainable for markets for the dollar to just keep on going higher and higher. And you typically see some sort of intervention for the dollar to weaken when it gets to a certain point. It's hard to know exactly what that point is, but if you look at the 5-year chart, you can see it's kind of been in a range, and now it's the highest level. As I said, it's the highest level since 2022 right now. So, could it go higher from here? Sure, it could. But markets start to get a little disorderly if the dollar rises too much and, importantly, too quickly. So that's definitely something to keep an eye on. But even so, I would agree with what you said, Brady, which is there are tailwinds for Bitcoin right now that are going to overshadow, what's going on with the dollar. Does Powell cut this many times in 2025? So the Bitcoin thesis is about a lot more than just what is the Fed funds rate or what is the DXY at. But these are important things to consider if you want to play the game of, trying to think about how markets are going to move in the short term.
Yeah, absolutely. And yeah, I mean, projecting that this dollar move continues, the U.S. Treasury is not going to want that. No one's going to want that. It puts a fundamental bind on the system. You just have to fade it. You have to fade it. It's not going to be sustained.
Pulling up some comments from Lynn Alden. She did a report actually with Sam Callahan they put out in September looking at correlations with M2 and Bitcoin price. I put it in the private chat, Brady, if you want to pull up that chart. But essentially they were looking at 12-month periods, I think, over the last 5 years, but fact check that. And essentially Bitcoin is correlated directionally with global liquidity 83% of the time over a 12-year period, 12-month period. And that's more than any other asset. So I think it is fair to say if we zoom out, forgetting that chart and the data abuse, if we zoom out a tiny bit, I think that it's still a good leading indicator for M2 liquidity. And I think, adding to that point, I think it brings into question, we have a 4-year cycle theoretically, and we have M2 correlation and Bitcoin becoming more of a macro asset and kind of following broader business cycle trends or liquidity trends or whatever. And so that would be a strong case to say that M2 and global liquidity, global conditions, macro conditions generally will push Bitcoin around way more than halving cycles.
Yeah, I pulled the tweet up. You want to talk us through it for the podcast audience?
Yeah, so I kind of went over this already, but they analyzed the 12-month windows in Bitcoin as the highest correlation of the direction that M2 liquidity is going at 83% more than anything else. And I think that's been true for a while, right? And I think that it's good to have that illustrated, and it's not disagreeing with your guys' points. Your points seem to be a little bit more short-term focus, and yeah, the Dixie going up blows out the short term, and that's just part of the noise.
Yeah. And I mean, 83, there's also like two different claims here. So first of all, 83% of the time is basically saying 1 out of 5 times it goes against it. So 20% chance it's going the other way. But also there's a claim that's been circulated of a 7-month lag, which is not what Lynn is or Sam is proposing there. So those are the two, because like it has been going down for a while and we've been going up massively. So it has been going against it.
Very true. Brandon, do you want to talk a bit about what we were chatting about yesterday? And I think this is a fun, it's, outside the markets, more geopolitics, a fun thing to explore. So we're going to kind of do it live and see where this conversation goes. But why don't you tee it up?
Yeah, let's do it. So I've been sort of nerding out about Defense 2.0 or whatever we want to call this in the US. And so the reason why I'm interested, first off, is because I do still expect this fourth turning will have a conflict globally. I think the chance of a US civil war went way down, but I think the chance of a hot war abroad, or even like a weird extended Cold War with China abroad, I think that risk is still here. I don't think it's going anywhere. And apparently a bunch of people in our Defense Department and various different departments are forecasting this being true. They're planning around it, et cetera. And so that kind of got me exploring, okay, what does this mean? And I keep hearing about all these changes on the battlefield in Ukraine, in the Red Sea and other places. And the takeaway, and I'm just a noob here, but I'd love to bring this into the conversation, is what type of warfare do we have in the future? Right? Is it aircraft carriers and F-18s, or is it autonomous drone swarms and energy weapons and this sort of zero humans involved on the battlefield, instead autonomous weapons with sophisticated software? And that combined with a resurgence of defense contractors in the US coming out of Silicon Valley, we're talking like video game nerds and the guys like Palmer Luckey, companies like Anduril, Palantir, Epirus, many other ones. They're coming up with all this crazy stuff, and I think that it ties into one other theme, which is that another century of American dominance. And I think this type of approach is going to be required to maintain some sort of stability abroad. And if we achieve some sort of a dominant position here with a new technological regime for defense, that will allow us to maintain order abroad, because you wouldn't want to start a fight because our weapons are superior. So it's sort of a deterrent effect, and it's also way cheaper. So tying into Doge and trying to get our budget under control, defense, we obviously spend a lot, but we don't need to spend billions of dollars on planes or aircraft carriers or whatever, because they're just not going to be good ROI tools in the future battlefield. And so, yeah, that's more or less what to bring up. I think that the best use case for making this feel real is looking at the Red Sea. So a band of Houthis essentially dominate the Red Sea, and they kicked out the American Navy, and they're just using cheap drones to blow up our vessels and whatnot. So we send $1 million missile to go kill a $1,000 drone, right? That asymmetric aspect is what we're talking about here. And anyone who's seen the giant drone swarms, they do a cool picture in the sky, and they're all coordinated. You see them out of China, you see them at Burning Man, you see them at concerts, festivals, kind of as a replacement of a fireworks show. That is us building out the future defense. And so it's starting to happen fast. I don't think many people are paying attention to it, but I think it's quite fascinating.
It is, man. A lot of things have changed. Real quick, I'll follow that. We just got it. The government will not shut down as of 3 minutes ago. It sounds like they have reached an agreement, which is good for markets, whatever you might think of government. But to your point, it's fascinating. I mean, yeah, the landscape of military technology has changed dramatically. I know there's a lot of people talking about drones, and you mentioned Palmer Luckey and Anduril. Like, these guys were kind of innovators, and they were embracing defense tech at a time where money in Silicon Valley, like, they'd actually cancel you if you worked in military applications. And so there's been this interesting shift where tech was seen as like very anti-military. It was, Google with like employees like protested Google having like a military contract. And now there's this vibe shift where it's saying like, you know what, like, you're not going to get rid of war. You're not going to get rid of the existence of power and the existence of hard power. And like, I mean, who do you want to be running the show? Do you want the Americans or, the Chinese? And it's, I mean, for me, it's an easy answer, right? I think I love America, and I think we, just there's so much going for this country. And so it's exciting to see this renewed optimism on bolstering, what does Luckey call it? He calls it democracy's arsenal, or like America's arsenal or something. but it's real, and it's something that we're facing now. A big shift there.
Brandon, how do you think Bitcoin plays in to, I mean, we've talked in Bitcoin circles about how Bitcoin can make it more difficult to wage war, especially really long wars, because you've got a sound money that basically punishes money printing over time. And that's how we have established or sustained a 20-year war in Afghanistan, for instance, right? Or, whereas typically governments would have to in World War I and II, they were funded by bonds, taxes, et cetera. So these are very, obvious public sort of pressures in order to fund the war, and citizens of the country waging the war or defending themselves, whatever, are able to say, okay, we don't need to do this anymore. I believe the objective has been accomplished, right? And the war should be over. So I'm not going to buy the bonds anymore. I'm, going to complain about the taxes. I'm going to vote this person out of office, et cetera, right? But that doesn't work. You can't even vote people out of office in a world with a money printer, because you don't need to be, your representative doesn't really have a say over the money printing, very, very indirectly, effectively not at all. So in a Bitcoin world where there's this alternative sound money that can be invested in, and other governments and countries around the world are using it, it becomes harder to fund wars, right? And this is an argument that's been made, and certainly to me, I buy it to a certain extent. I don't think it ends wars, but I think it will help diminish them, the length of them, maybe the severity then, because it's diminishing the length. How do you think that Bitcoin plays into a world where military weapons are far cheaper, far more available, and allows for this more asymmetric defense and attack that doesn't necessarily require raising tons of money?
Yeah, that's a good question. I think the key here is that it dehumanizes war even more. So we're not sending our young men and women abroad. Instead, we're just having nerds playing video games that control drone swarms. And so I think that actually enables the military industrial complex, or whatever we call this thing, to infiltrate more and do more and get away with it without us feeling as many consequences. So I think it goes against that narrative, which I would say is more of like an industrial society narrative, where you go bring your tanks over there, you bring your ships over there, and you go steal the gold of whoever you conquered. Digital gold makes that hard, and I think the next warfare is mostly digital and autonomous. And so I foresee more like ongoing cyber Cold War all over the world for a while, and hacking into each other's grid if things get bad, blowing up power stations if things get bad, water treatment facilities, stuff like that. But on the margin, I expect it to be more just drones and anti-drone technology. I think the company, I'm blanking on the name of the company, but they're creating like a energy gun. They take essentially AI chips, and they put some, I forgot which molecule on it, and they concentrate energy, and they literally blast miles away concentrated energy that fries drones. And they're already doing this right now, literally miles away. Mm-hmm. And so I think that's more of the type of thing. What also worries me is cyber is everywhere and nowhere. It's scary, and it's very easy to false flag. Okay, so the US government, not that they would ever do this, but theoretically they could scare us into giving up our freedoms by watching some sort of cyber attack take out a water treatment facility, an energy grid, or otherwise. And I'm not saying they would or wouldn't, but I don't like the incentives being there. And I think that we're going to see that in the future. And I think that we'll see, I think we're going to see cyber taking the cake here. And I think we're going to be scared, and we're going to be asking for our defense. And so I'm kind of bearish on the idea that Bitcoin stops wars. It stops one part of the war, which is you don't get to steal the other person's money. But I don't think it's going to change. I think it's going to evolve. And I think we're going to see a lot more of it in the next decade or more. The moons, we're going to fight over the moons soon too in our lifetime. So that's my take.
Moon should be a state.
Right after Canada, we'll
I
take
bought
the
the
moon.
shirt, man. I have it. It's on the way. I just a shirt that says "Moon should be state." Um,
Have you guys seen this show on Apple TV called For All Mankind?
yeah, I love it.
I love it too. It's an alternative history of the space race. Basically, the space race doesn't end, and it goes on through the colonization of the moon and Mars, and thinks through all of those geopolitical ramifications and what it looks like when the first gun is shot or the first person is killed on the moon. And anyway, fascinating kind of sci-fi futuristic looking stuff.
Yeah.
Check that out.
I'm also though on that thing.
Yeah.
I'm also a little bit of bearish on the like Bitcoin stops wars sort of thing. More so that I'm actually like more bearish, like the path to like there are no fiat currencies, just Bitcoin. I like is so complicated and far out on a timeline that it's I don't even try to spec. I think the foreseeable future is the coexistence of Bitcoin and fiat currencies. And there's maybe some like constraint that like, I think when you have a widely adopted kind of asset like Bitcoin, it constrains how much money can be printed. But I've always been a little skeptical of this world where they completely do away with it. Also, just because there's a tremendous incentive. Let's say all of your opponents are on a hard money standard and you want to fight a war, like Yahtzee, let's go back to fiat again. I'm going to print money, you're not, and we're going to fund our war that way. There's just kind of some fundamental challenges of that. But I am like very bullish, and I think there's tremendous good that comes from the coexistence of both of them. So that excites me. I think it's there's quite a bit of good there, but I'm skeptical that I think we're in the coexistence for the foreseeable decades.
The principle that came out of, the advent of nuclear weapons and the race to stockpile, to be able to make and to stockpile nuclear weapons was the idea of mutually assured destruction, or MAD. Right. And that has kept us out of some thermonuclear global war for however many years, 70 plus years. Right. I think a similar thing will happen here. There's a race to develop AI power, a race to develop quantum power, a race to develop other types of digital and robotic power. And there needs to be some kind of, balance achieved, right? So China, Russia, and the US, the big powers in the world, are chasing all of these things. And hopefully, there's some symmetry in terms of the advancement, and there's some kind of mutually assured destruction sort of, I guess, almost like organic sort of enforcement against using these in some mass destructive way. And what's interesting to me is that these technologies, as opposed to like bombs and weapons and tanks, etc., are extremely useful for good as well. So the race to develop these things from an impetus to defend yourself that is also benefiting, in this case, as opposed to conventional weapons and warfare, benefiting humanity in other ways, right? It's more of a sword of Damocles as opposed to just like one edge of that sword with these other conventional weapons. So there's something, I think, that's sort of a silver lining out of the type of warfare in the future that will be actually benefiting society as well on one side of the equation.
Can I just add on? I mean, you guys are making a lot of really good points here, but one that Steven brought up about this kind of incentive or game theory. If everyone says, "Oh, we'll all be on a hard money standard," but then there's some big power out there that says, "Oh, okay, you guys are on hard money standard, but we're going to go on an easy money standard. We're going to go on fiat." And another way of saying that is we're basically going to milk our citizens as farm animals, whether they like it or not, and use those resources not transparently, not through taxes, but through the money printer. And if they do that and threaten you militarily, you either have to have a lot of cohesion internally in your country and buy-in to say, hey, everyone, you have to support a tax to fight this enemy. And then if they don't and you get taken over, then your hard money standard goes out the window. Another way to think about this, because I find this to be a fascinating topic, for the reason that I'm a libertarian at heart. I want a small state, but I've always found this to be one of the most convincing arguments against a small state libertarian mindset. Let's envision that the U.S. turns into a bunch of what's the small countries in Europe? It's like Luxembourg or Liechtenstein or something like that. This would probably be like a libertarian's dream, is that the U.S. turns into like 10,000 Liechtensteins or Luxembourg, whichever one's smaller, I forget. But let's say it turns into 10,000 of those. It's like, local government, hyper local, great. Well, just imagine that Mexico was China, and they had as much military power and control over their people through all the uses that China does to control their people, plus the money printer. Well, what if they roll in militarily and take over, and you can't get your 10,000 Liechtensteins to coordinate and to protect against that attack? Then you get taken over, and all your ideals about small government, libertarian, local politics don't matter anymore. So again, I'm coming from this as a place of someone who is a firm believer in small government, calls himself a libertarian, but I've always found that to be one of the most convincing arguments against it in that situation where you kind of need some sort of centralized coordination to protect against an outside attack.
Fully agree. I think what it would do is it would force the long extended unpopular wars to no longer be supported.
Yeah.
That would be the hope, right?
Right.
But what are you going to do? All you're going to do is move assets out of US dollars or out of US treasuries. And you need some sort of a mass adoption, or maybe that's the wrong word, but some sort of critical threshold of US Bitcoiners holding Bitcoin as a large percentage of their total assets in order to actually incentivize the government by selling their assets. And so
it discourages money printing because it just drives people to Bitcoin, right? And like undercuts the demand for the dollar or trust in the dollar, right? So the fact that there's an alternative is what makes all the difference here. So yeah, that's the way I see it. That's the mechanism that I see.
And we want the ability, to your point, John, the barbarians are at the gate. We need to defend ourselves. Everyone's on board. Take my money. But if we're 20 years in Afghanistan, that's a whole different story. So I don't know how that will functionally work. And it's probably just a directional shift. It's not going to like turn off those wars, honestly, but the incentive shifts slightly at least.
Yep. Well said.
Right. So we've got rumors coming out of the MENA conference. How do you guys say that acronym?
I always said MENA.
MENA conference. That makes sense. That Dubai, or the Emirates, Dubai is where the conference was held, but that the Emirates has already amassed 300,000 coins. And I've heard this from quite a few sources at this point. Definitely not confirmed yet. If this is true, and they've made an absolutely brilliant move by front-running the probable announcement of the establishment of a strategic Bitcoin reserve, how do you think this plays out? We announce the strategic reserve, and then the Emirates and perhaps other countries say, yeah, we're on board. By the way, we've amassed 300,000 coins.
Yeah, so I've heard this as well, and I believe it. I find it credible. I've heard it from credible places. I think they have, actually, it's a bigger number than 300. And I think the strategy here is none of these other people. So you see that, like, the US is going to do it, and so you want to front run them. But you don't want to spook the US, right? Like, you don't want to like, oh, they're going to do it, and now like 6 other countries announce that they're doing it, and maybe you don't want to mess up the process. So you do it quietly. And once the US announces, you announce. I think that's what we're looking at. And yeah, I'm a believer of even more than what was shared there has already happened and continues to happen.
Didn't the Dutch parliament also push for an SBR? I don't know the credibility or what part of the Dutch government, but they're like, hey, we're leaders of finance. We came up with the first joint stock company, first public equities market, essentially.
There's a lot of small bills floating around.
Yeah.
but they're like introduced by like one dude in Congress or whatever have you. So I don't put a whole lot of credibility into those, but it's definitely all over the world right now. People are, at least individual members of the lawmaking bodies, are proposing a reserve.
So do you think we're going to get both corporates and nation states actually come in with size this cycle? Because last cycle we kind of thought corporations were going to come in big, and then we saw El Salvador, and we saw, oh, it's just a matter of time. And I would say neither materialized.
I think neither materialized. Yes. I think this is a good analog to look to. We all remember, for anyone who was following in 2020, 2021, MicroStrategy pulled, the Bitcoin treasury playbook, Elon for Tesla bought, and we thought there was going to be like a wave of institutions after that. Now in hindsight, we've kind of explained it as, okay, what really happened there was unique company, unique corporate structure, unique founder with like an ability to execute this playbook. So it turned out to be a pretty small number of companies that actually did it. My view is that I don't think it's going to be like blow the doors open. Every company's doing it this time around, or nation states are doing it. But I think we get more than just like, oh, a couple more companies have, and we've even seen it already, to be honest with you, with like Mara, Riot, the miners, are, some of these people executing the MicroStrategy LBE leveraged Bitcoin equity playbook. And I think we're going to get nation states. It may not go all like to the point where every nation state is doing it. It might be like the ones that can move a little bit more quickly. So I would say it's going to end up somewhere in between the like, oh, only a handful of entities did it versus, and like everyone's doing it. It'll end up somewhere in the middle this cycle, is my opinion.
That's probably a good sort of mid-curve case. I would say there's a not insignificant chance that this does cause the suddenly. And we've talked about this before too. So I could see, it's the most powerful country in the world and you want to keep up, right? I would assume that some countries have been secretly stacking for a while now. That's the best way to do it, right? Until you're ready to come out and try to drive more adoption. And once the US sort of, has publicly expressed by signing this bill, which is now published, by the way, and I'll give a quick rundown of what's in it. But once the US has signaled, hey, we're in, then it's time to come out and say, so are we, so are we, so are we, and just start driving up adoption. And you've been able to stack under 100,000 that whole time. So yeah, I could see this really running with, it's just such a massive deal. Imagine like 16 years, right? And so Trump takes office, I think it's like January 20th. On day one, he's, apparently going to sign this executive order. So that would be almost like 16 years and a couple of weeks after the network came to life in 2009 on January 3rd. It's astonishing to think that in 16 years, we've gone from absolutely nothing, zero, no transactions, even the first 7 days until Hal Finney received 10 Bitcoin from Satoshi on January 10th. So there's no activity on the network. So just mining empty blocks, all the way to the president of the United States signing an executive order to create a strategic Bitcoin reserve in the most powerful nation on earth. 16 years. It's absolutely astonishing. It's exponential growth on all levels. This is an exponential technology. It's built on an exponential technology in the internet. And let's just take a look at this chart. I think this chart shows, this is exponential. This is an exponential technology versus an analog technology, right? And this is ETF adoption from 2005 up to 2024. The reason that stuff that has such an exponential growth and has outpaced gold so much is because the fact that it is an exponential network, right? Every person that comes into the Bitcoin network doubles the value of the network. So it's incredible. And this is what we're seeing happen right now. Wow, guys, like it's absolutely incredibly bullish. Maybe the suddenly is here.
This chart needs to have a Peter Schiff crying face on it. That's a big miss.
Yeah. Most successful ETF launch in history. Massive demand is out there. People are waking up and getting it. I called it HODL FOMO 4 years ago. And the whole premise there, it was combining two memes that are really the opposite of one another, right? But it's fear of missing out on holding Bitcoin for the long term because people are understanding what it is now, right? Right now, it's in the store value phase, and it's going from a speculative store value, so-called, to an established store value that is being trusted by governments and by corporations in the mainstream financial world. So now we're in this place where we're on that curve of monetary adoption where we're squarely into store value. Everyone gets it. It's great at a store value. What they don't get yet is that eventually it'll be, because it's a great store value, demanded as a medium of exchange by, by merchants, people selling stuff. They want the Bitcoin. They don't want to take your shitty money and convert it into Bitcoin. They just want to get the Bitcoin. And that's going to happen. And there's no doubt in my mind. This is shown over and over and over again throughout the history of money. Study the history of money and monetary technologies, and this is what happens. So it's incredible to see that we're running up that curve, and I think that that's established store of value sort of checkpoint is right there at the kind of the elbow of the asymptote of that that exponential curve. So we'll see what happens, but everything's changed.
Yeah.
All right. Well, let's see what happens on January 20th. The bill, the executive order, I should say, to establish the reserve. A few interesting things about it. It does require the U.S. government acquisition of Bitcoin in a strict way. It gives guidance about that, but the acquisition of more Bitcoin puts strict controls and policies on custody and security, mandates a public proof of reserve and annual reporting, which the famous Federal Reserve hasn't been audited, right? And how much gold do we actually have in Fort Knox? All that stuff is opaque. This is an open network, so the executive order says that you need to have proof of reserve and annual reporting for transparency to the public. Imposes strict limitations on selling the Bitcoin and mandates holding it for at least 25 years, except in extreme national emergencies. And then it talks about coordinating with the rest of the government and with states, offering to allow states to put their treasuries on a Bitcoin standard as well and store the Bitcoin with the federal government. So all very interesting stuff. You can tell some Bitcoiners wrote that.
Absolutely.
Yeah. I'll just say about the, thank you for whoever said, John, love the sweater. And love Max Lubka, need a new color tank top, and me for Treasury Secretary 2028.
How many chairs are you sitting on, Max? How many chairs? You sitting on one chair? Are you all in on that chair? One color.
One color. Decision fatigue is real.
I just do want to say this about the whole nation state adoption. I could see a bunch of nation states adopting in the next 12 months, especially like you said, Brady, if the US kind of leads it. But I do think it's important to remember that they don't want a scenario where Bitcoin's just running away in price in the most crazy fashion and people are trying to clamoring to get their hands on it and get out of their local currency. That's not really in the government's best interest, especially when you consider this. And I know Steven's going to love this because he's a fan of Russell Napier. He just came out. He did an interview with someone. There's some screenshots circulating on Twitter here. He's calling it the world is moving to national capitalism, which he's all reshoring is basically the idea. And his thesis is that all the countries are going to end up taking on more debt, and they're all going to choose to inflate their debt away. So in that environment, you don't really want your citizens at the same time being like, oh, let me get out of fiat and go into Bitcoin. I'm not claiming that people aren't going to do it. They are going to do it. The bullish case for Bitcoin is there. I'm just saying that I don't think nation states want to pour too much gasoline on that fire, given some other factors they have going on, namely that they want to inflate away their debt over the next 1, 5, 10 years. But curious to hear what you guys have to think about that.
I found Napier's piece really interesting. I've always kind of liked him. So I think he's a sharp guy, and I think he identifies dynamics that few people do. That being said, I think his weakest categories are on timing, and the timing of some of his predictions. Like, he was early to identifying that the Treasury and the government, the fiscal authority, had kind of seized the ability to print money from the Fed. And that was true. We saw that with the PPP loans, but that effect has been more muted over time since he made that prediction. And I think so anyways, like, I think directionally he's correct on like reshoring and national capitalism. That is certainly the direction we're going in with all of these countries. He went on in that piece to talk about, therefore, like, countries are going to sell the S&P to like repatriate funds back. And I'm not so sure about that. You know, I could also see a world where like America adopts national capitalism. But the asset markets in all of these other countries are just so terrible right now. And the asset markets in the US have been so dominant. You've got Europe's a mess. South Korea is going through a coup. China's facing some of the largest economic challenges it has in a long time. And like the divest scenario, like I'm a little skeptical of that occurs soon. The cool thing with what he says is like, oh, so if this does happen, like all of these nations, they sell the S&P. And so you want to own assets that like aren't in the S&P. Well, it's a great bull case for Bitcoin.
Yeah, I mean, I think good points. I would summarize it as, you know, Stephen, you believe that he does make some good points, like conceptually high level, but maybe some of his calls about what to do from a markets and investing perspective may not play out the way he's thinking they will.
That's kind of my take. Is I think he's capturing the trend and the kind of high level analysis, but I'm not convinced the way it results in is like all international investors like market sell the S&P 500 and bring all the money back. I'm skeptical.
Let's go back to history, for example, because I think what you're saying, John, is a real risk for Bitcoin right now. If we go back to the 30s, okay, FDR needed to inflate the debt away and deal with that as well. So what do? He locks up he takes all the gold and says you cannot escape the sinking ship by fleeing to gold. Instead, he forces all Americans he socializes the cost of inflation across all Americans. And obviously, if you could own gold, it way outperformed, but instead they closed that escape hatch. And so I've definitely heard some concerns from Bitcoiners saying, hey, what's up with the SPR? What's up with MicroStrategy? What's up with Coinbase, ETFs, etc.? So if push comes to shove and the US needs to nationalize Bitcoin for some reason, they have the puzzle pieces there and they're growing and growing and growing. We can thank Satoshi, though, for having a very steep issuance curve, meaning half of the outstanding supply came out in the first 4 years in an environment where no governments were paying attention or attempting to acquire it. So thankfully, the majority of the supply is still held by individuals. But I think a world where we need to inflate the debt away and it's not going well, that is a world where seizing Bitcoin could be back on the table. I don't expect that. I think the chances are low, but I think the conditions are right for that. And it's the same thing that happened in the 30s. So we should at least be thinking about it.
Yep, that's well said.
I'll just add to that a little bit. I think, like, if you look at the playbook that the U.S. government at large, Treasury, fiscal side and monetary side, Treasury and the Fed, they kind of did everything in World War II. Like, it was capital controls, yield curve control, and they let inflation run amok. I don't think they're going to be able to enact capital controls now like they did back in World War II. We've talked about this a lot internally at Swan. Basically, during World War II, patriotism was during and after, patriotism is sky high. Trust in the government is sky high. People's knowledge of like what it means for them to turn in their gold was very low. I don't think most people understood what was happening there. So if the government tried to enact something like that today, I think it just falls on its face. So I don't really see U.S. capital controls going very well in this environment. I think there will be on the monetary. I think they're never going to just like let inflation run to 20% and cap yields. That's what they did post World War II. Again, there's too much knowledge, too much information moves too quickly for them to do that. So I think they're going to try to play this middle ground of like, oh, we're managing inflation, but it's kind of going to run hot. We're not capping yields, but we're not also letting them, run too high or too low. So I think that's going to be the playbook they do this time around. I don't see the capital controls happening in the U.S. I don't know what you guys think, though.
I don't know.
My take. So actually, I think capital controls, right? Like you need buyers of the debt. And so historically in these scenarios, what you see is like the citizens become forced buyers to the debt. What if Trump says to all the NATO countries and all the countries we provide defense services for, hey, if you want these services, you might need to buy some of this debt. And it's actually capital controls on our allies, I see this as like reasonably probable. We spin up a 50-year bond. If you want U.S. protection services, you got to buy $10 billion of that bond every year. Something along those regards. I mean, we live in a different world, and one of America's key strengths is its open capital markets, and you have to really be in a desperate spot to kind of go in there. So I'm a seller of the idea that like there's going to be large scale financial repression on U.S. investors, but I could be a buyer on that. Like we do get foreign countries to finance our deficit.
Yeah, tariffs, or you buy our super new long dated bonds.
Yep.
All right. Good session. Let's do one last little one before we jump off. El Salvador took an IMF loan. They, in exchange for making Bitcoin or accepting Bitcoin voluntary in El Salvador instead of mandatory. I guess the IMF had a big problem with that. And then Bukele goes, after he gets the loan, I think it was $3.5 or $8 billion loan. After El Salvador gets the loan, he goes out and makes his biggest Bitcoin buy in a while. It wasn't a huge buy. It certainly wasn't $3 billion worth, but a little kind of, just this guy's style, right? Just a little bit of a jab at the IMF. So, style points for Bukele yet again.
Yeah. Vibes based.
Yep. Based. All right. Well, great show, guys. We have yet to decide if we're going to be on next Friday in the midst of the holidays. I guess that would be 27th. But there's definitely a chance we will be here. We'll do, if so, we'll do a year in review. If not, we'll see you in the first week of January and we'll go year in review and looking forward in 2025. Still appropriate. So I hope everyone has absolutely happy holidays with your friends and family. Hope your Bitcoin conversations go well, or there's awkward silence when the word Bitcoin comes up and you just walk out the door for a little while. Whatever it takes. Sometimes Bitcoin's a contentious topic, but hopefully it's becoming less so as we see more and more adoption and acceptance in the mainstream. Guys, any final words before we sign off?
Bottoms in, I think.
If we do the show next week, I will wear this sweater again.
Yeah, we've got
I'll do sweaters. Yeah.
Chat full of comments about the sweater. John's freaking sweater. Good stuff, man. Good stuff. I'm sorry we let you down, brother.
Yeah, guys.
You do you.
Loss of trust here. Big loss of trust.
All right. Anybody? Steven and Brandon, you have any other thoughts? Last words?
I just heard happy holidays and I see a Christmas sweater and I'm just laughing at the meme I saw where it was a map of the US and it's the quote flyover country versus the coastal elites. And it's happy holidays to the coastal elites and Merry Christmas to the red middle of the US. Have you seen this?
Yeah.
Not really much.
Merry Christmas, thoughts, everybody. But... Merry Christmas. That's what I celebrate. So there you go.
A little chuckle.
Yeah. All right. There is one last thing to show you all. We have announced Bitcoin Rewards credit card, the Swan card, You can check out you can sign up for the priority access list at swan.com/card. We will keep you updated over the first quarter of the new year as we get more details about exactly what that card will provide for you. But I can tell you right now that you can just go out and live your life and build your legacy, and that's you go on a nice vacation, pay for it with your card, groceries, whatever you're doing, live your life, and you will get Bitcoin rewards back put straight into your Swan account. You don't have to do anything else. No loading up debit cards, no gift cards, no exchanging tokens for Bitcoin on a crypto casino. Just Bitcoin put into your Swan account when you make purchases. Very exciting. So go to swan.com/card, sign up for the priority access list. We'll send a few emails and let you know how things are going. We expect to drop the cards in Q2 2025. So really excited about this and happy to bring a very simple Bitcoin rewards card to the market. Share that with your family and friends. It's a great way to get people to start stacking some sats with very low friction, very little friction. All right, that's it for us today. Hope everybody, again, has happy holidays and Merry Christmases. If we don't see you next week, Happy New Year. Take care, everyone, and we appreciate